This is Matthew Cratter from Bitcoin University, and today I wanted to do what we've been calling Toxic Bitcoin Saturday. I'm going to call it Bitcoin Q&A Saturday just for this week to see if we can get some more views this way and not turn off people who haven't grown to love toxicity. We're going to be starting with this video, and this is a good reminder that I am available on other platforms as well if I ever were to be banned from the current platform. This is a video about using gold to protect yourself, and it was sort of tongue-in-cheek video saying the best way to protect yourself with gold is to use gold bars as weapons. Obviously, this did not sit well with a lot of gold bugs. Kev C7395 saying, being a free market guy, it's a shame you dislike gold the way you do. My response to him was, free market doesn't seem to like gold either. It keeps losing value against Bitcoin, against houses, and even against things like toilet paper. I made that comment a little bit tongue-in-cheek, and then I happened to look it up, and it turns out that holding toilet paper as an investment actually has outperformed gold since the beginning of 2020. Gold is up about 25%. Toilet paper is up 28% since the beginning of 2020, and this is in spite of the fact that the supply chains have somewhat normalized after the pandemic. So you got to be very careful to choose your savings account, your savings vehicle carefully. Here's a chart of gold since the beginning of 2020, and here's a chart of toilet paper. I'm using a Fed data set for this. The actual price of toilet paper is probably up much more than this PPI index or sub-index, because the Fed always undercounts inflation. So that's your comparison of gold versus toilet paper. Another comment about gold from Scott D8624. Gold is not a highly speculative asset like Bitcoin. Nevertheless, gold is a smart play as long as central banks continue buying it. How much Bitcoin do central banks own? My response was this: it's impossible to know how much Bitcoin central banks own, but I'm pretty sure that they do own some at this point. They're smart enough, but they own a lot less of it than they do gold, which means more potential future buying than gold. Central banks loved U.S. Treasuries over the past 20 years, and that was a terrible investment. Central banks are not profit-minded institutions. This is very important to note. They're political institutions. They're taking into account various political, geopolitical balances. They're not investing to make a profit. So it's foolish to copy their investments. Then it was wonderful to see Johann Sebastian Bach come back from the grave to post this comment. Matt, this was the first video from you that I didn't like, and I've seen a lot. Surely gold will be a cornerstone of the next global financial system. Its price is now suppressed, but then it will be revalued. So better hold gold and Bitcoin if you want to survive the next financial fiasco. My response: gold will not be the cornerstone of the next global financial system. There will be an arms race to buy Bitcoin once the world's central banks understand this fact. Even if the paper gold price suppression went away, gold would still have a huge problem because it's being demonetized by Bitcoin. And the 21st century needs digital money, not shiny yellow rocks that are difficult to move around to settle trade imbalances. So then I went on to, looks like he may have deleted a comment. My response to his next comment was, so they're going to actually settle billions of dollars of trade by putting bars of gold on boats and airplanes in the 21st century, or are they just going to pretend and use gold IOUs? This is what the gold standard always devolves into, unfortunately. Symbiotic 8480, gold is so beautiful, made in the stars, I think alluding here to the fact that it's been produced by supernovas at the beginning of the known universe. My response: it is beautiful. When it gets fully demonetized, more and more artists will be able to afford to use it in works of art. So I certainly don't hate gold. It's very, very beautiful, and I think it's best left to artists and for jewelry. Why not have both? Why can't we be friends? In other words, gold bugs and Bitcoiners. And my response was, because you cannot own both with the same money. This is always that comparison where you could be on Facebook, or you could be on MySpace, but that didn't cost you anything. When you have $1 to invest, you have to make a decision. You can't take that dollar and buy $1 worth of gold and buy $1 worth of Bitcoin. You have to make a decision. You have to choose, and those choices have consequences. Those who hodl 50-50 gold and Bitcoin keep getting poorer relative to those who hodl 100% Bitcoin. And I think this will continue for the rest of our lifetimes. There's also another golden rule. This is from Calibre92. There's also another golden rule: don't put anything in one basket. Always diversify, no matter what it is. And I sort of quoted Warren Buffett back at him, saying, as Warren Buffett says, diversification is protection against ignorance. It makes little sense if you know what you're doing. And that's one of the few Buffett quotes that I can agree with. Cheamos, I'm not sure if I'm pronouncing that name correctly. Hey Matthew, just a heads up, YouTube is absolutely unsubscribing people from certain channels. I just checked my subscription, your channel, and I wasn't subscribed, even though I subscribed a long time ago. Point being, you may want to give a shout out to all the people who think they're subscribed and have been subscribed for a long time to check their subscription just in case. So if you can do that, if you're a current subscriber to this YouTube channel, if you can also leave a like, leave a comment, and share this video with a few friends, that would help to support the channel a lot. Michael Saylor was kind enough to retweet this video, when to take profits on your Bitcoin, which was a little bit of a tongue-in-cheek video as well, in which I talked about trading various currencies that were devaluing against the US dollar, like the Turkish lira or the Argentine peso. And I pointed out that the correct thing is not to trade in and out, but once you found the lifeboat, to get fully in the lifeboat. And once you're in US dollars, you'd never want to diversify back into Argentine pesos or Turkish lira, because these are currencies who are losing purchasing power every single day and every single week. Thiago responded to this tweet by saying Bitcoin is 50% down from its all-time high. If you short at the top at 10x, that's 500% profit. Risky, well, use 1%, or the Kelly criterion. Responsible risk management is where most people go wrong. Trading or holding both have big risks. Not everyone can get those sweet loans. Michael, talking to Michael Saylor about borrowing against Bitcoin or borrowing money in order to buy more Bitcoin. For MicroStrategy, my response to Thiago was, one of the best ways to get rich is to avoid doing stupid things like running across highways or shorting Bitcoin. I wanted to elaborate a little bit more on Thiago's response to this tweet, because I think it's important. When I saw it, my immediate response was, just tell me that you watched the video and learned absolutely nothing from it. So when Thiago says, quote unquote, if you shorted at the top, my response is yes, and if I had wings, I could fly across the country instead of needing to buy an airplane ticket. No one knew when the top was going to be. Thiago didn't know. I didn't know. No one knew, because it's impossible to identify tops in Bitcoin. And ultimately, Bitcoin has no top because fiat has no bottom. I took that from someone else. I can't remember where I got it from, but whoever came up with that meme, I think it's a true meme, and it contains a lot of informational value. So if you want to short Bitcoin, as Thiago suggests, be my guest. The problem is shorting is not an asymmetrical bet. The most you can make is 100% if Bitcoin goes to zero, which is obviously not going to happen at this point. You can use quite a lot of leverage, and you can make higher returns than that if you want to lever up your short, but you're really quite likely to blow yourself up in the process. Shorting is not an asymmetrical bet, unlike going long. Going long Bitcoin is an asymmetrical bet, because the most you risk is it goes to zero. So in this case, you're risking $36,000, $37,000 to make $1, $5, $10, $100 million profit. These are round numbers. Obviously, you don't need to buy a whole Bitcoin, but you get the idea. It's asymmetrical. Where shorting, it can basically go up forever, whereas it can only go down to zero. So that's not the kind of asymmetrical bet that you want in your favor. So you have this choice. If you decide to short Bitcoin, you can do a small short and not make very much money, in which case it's probably a waste of your time, or you can do a large leverage short and you'll probably get taken out on a stretcher. And I don't think Thiago even knows what he's talking about when he's talking about risk management here, because he seems to be confused. He says, well, just risk 1% of your portfolio. Well, if you're risking 1% of your portfolio at 10x leverage, that's like risking 10% of your portfolio. Maybe he meant you just risk a 0.1% of your portfolio at 10x leverage, in which case you're only risking 1% of your portfolio. You're not going to make a huge amount of money. If Bitcoin goes to zero, you'll make 1% on your portfolio. And who wants to waste their time doing that? Especially when you have real risk that Bitcoin melts up and goes against you. If Bitcoin goes up 10x, you're completely wiped out if you're short with 10% of your portfolio, in other words, 1% levered at 10x. He mentioned, I'm going to use good risk management. Sure, you can go right ahead and get stopped out of your short position every few weeks. That's called death by 100 paper cuts. Meanwhile, other Bitcoiners and I are going to be out in the sunshine and fresh air, hiking with our family, our children, our dogs, while the traders are glued to their screens trying to short the soundest, most unstoppable money in the history of the world. Have fun staying poor. It's not a very smart way to treat this opportunity that we have with Bitcoin. Another response to a video I made called How a BlackRock ETF Could Destroy Ethereum. This was a response from Chong Wei. I know you're a fervent believer in proof of work. You admitted in a previous video how skeptical you were of Bitcoin initially before you renamed everything. So I ask you to take a look at CASPA, K-A-S, through the lenses of innovation the same way you did Bitcoin. My response, CASPA is 14 years behind Bitcoin. It can never catch up in terms of Lindy, global adoption, etc. It doesn't really matter what the tech is. And the other problem is it did not have this immaculate conception. We know the founder, he's still around, etc. And so it has these problems. I said, I'm sorry for your loss. Changwei responded, my tweet wasn't intended to make you so salty, bro. I sleep soundly at night on gains from both assets. And then he has some cherry-picked assets from his account. Looks like he's done very well this year. Bookmark this tweet. See you soon, Matthew. And then he retweets this video of a guy who's supposedly a Bitcoin whale who's now buying CASPA. I'm not sure if this is even true. My response to him is calling me salty. I'm not salty. My reply was purely factual. I've spoken to thousands of people who talk just like you and think that they can outperform Bitcoin over long periods of time. I've been seeing this on my channel for the last 4 years, since 2019 when I first started really talking about Bitcoin. No one can outperform Bitcoin by trading or holding. Most people have to learn this the hard way. So I would encourage Changwei, take those juicy profits, move them into Bitcoin, and you'll be glad that you did. The next comment comes from ParkScars6459. This was a response to the video that I made about FinCEN and Swan Bitcoin, which I'll link to in the description notes below if you want to watch it. I'll link to all these videos down there. And Parks Cars says, my problem with Swan is that Corey, referring to Corey Clipston, the CEO and co-founder there, Corey repeatedly mentions that his goal is to IPO Swan. Stocks are a sheet coin, and I'm not going to help Corey achieve his fiat dream to dump his Swan sheet coin stock on the market so he can be rich. My response to that, and I don't work for Swan, and I'm not being paid or compensated by them in any way, but my response to Park Scars was, this is basic capitalism and will still be around on a Bitcoin standard. There's nothing wrong with raising capital by issuing stock, whether privately or in an IPO. I would probably never buy Swan stock once it's publicly traded because I would need to sell some Bitcoin to do so, but that doesn't mean that it's somehow unethical for companies to raise money. People who create businesses that provide goods and services that the public wants deserve to get rich from it. How else do you expect companies to raise money to grow operations? So I just wanted to highlight this comment and highlight my response that I don't think that other assets are a scam. I don't think stocks are a scam. You can have good companies issuing stock and less ethical companies issuing stock. Fortunately, in the US, we do have strong disclosures compared to many places on earth, which is one reason we have the deepest capital markets in the world. The SEC is certainly far from perfect, but there are disclosures. And the main reason that most retail investors get wrecked holding stocks is because they haven't been trained to do the research, to read financial statements, and also to figure out how the parent company is going to do moving forward. Most people just jump in and out based on hot stock tips. Next comment from Emrico35. What do you think about the Tangem wallet? My response, I'd avoid it. Wallets that offer support for altcoins have a much wider attack surface. Plus, you're helping to prop up the altcoin ecosystem, which is bad for humanity by supporting a wallet that doesn't just be Bitcoin only. I prefer Coldcard or Blockstream Jade hardware wallets. Next comment, a true Bitcoiner does not need to obsess about Ethereum. Always be careful when people preface something with a true Bitcoiner. True Bitcoiner does not need to obsess about Ethereum as it differs completely from Bitcoin. That is certainly true. This is a very childish channel in that regard. My response, it's instructive for people to learn the huge differences between Bitcoin and ETH. And this is the only reason I cover ETH. It obviously has to be covered because it has the second largest market cap next to Bitcoin of any digital asset in the space. It's also quite useful because I can do comparisons like proof of work versus proof of stake. And this enables people to understand better why Bitcoin is so special and what makes it a really unique digital asset. Plus, it's fun to poke fun at people like Vitalik and Joe Lubin and Ethereans who still just don't get it. In terms of my response to him saying a true Bitcoiner does this or that, I responded by saying a true Bitcoiner can do whatever the F he or she likes. There, I fixed that for you. So I think we have to be very careful telling Bitcoiners what they can or they cannot do. Here's another response to the gold video from Basic Beach Community 1, in which he's obviously a gold bug and he's a little triggered by this. Does Bitcoin fix the fillings in my teeth the best? I didn't think so. Well, I've got news for Basic Beach Community. If he's been to the dentist lately, most dentists are using gold a lot less than they used to, so they're not even using gold for that. Does Bitcoin complete the conductivity of a Tesla or arm the Tomahawk missile like silver does? I didn't think so. Bitcoin does not do a lot of things as good as metals, even if it's a central bank metal like gold. My response: a metal having industrial or utility value does not make it good money or a good investment. If it did, rich people and central banks would stockpile iron and aluminum and copper, which are actually much more widely used metals than silver and gold, but they do not. They don't. Monetary value is very different from industrial value, and we'll talk about that in a minute. A question from Mason Guritz 6758. When you do your show tomorrow that addresses questions, I was wondering if it's still a position or negative to hold physical silver as an investment. I got rid of all my gold, but I still hold quite a bit of physical silver. I hope there's more value in it than beating somebody in the head with a bar of it like gold is. Again, this is not investment advice, but my response would be that silver was essentially demonetized in the late 19th century by the decisions made by the newly formed German government when Germany became a country and united all the different parts of it, and also decisions made by the US and the basic approach that these and other countries took to bimetallism, where you had both silver and gold functioning as money. These political decisions, though, were the natural development driven by the fact that silver has much lower stock to flow than gold. There's much more of it produced every year. Silver has been very bad, or I should say there's much more of it produced every year versus the actual stocks, the inventories held above ground. And I also wanted to point out here that silver's been a very, very bad inflation hedge over the years. We can see that silver has never retaken its December 1979 high in inflation-adjusted terms. This is an inflation-adjusted chart, and this chart probably really understates inflation if it's using the CPI. So silver has been a terrible hedge against inflation. The other thing to recognize is how the gold to silver ratio has worked, where there used to be some sort of parity over many years. And what we've seen over the years is that gold has appreciated against silver and basically is now trading at the top part of this chart. It does sometimes fall down to the bottom, but what we've seen here is that this chart is not nearly as mean reverting as you would expect, and this is what we're really seeing here is gold having demonetized silver and acquiring a much higher monetary premium, or at least keeping its monetary premium, while silver has lost its monetary premium. As we mentioned earlier in this video, having industrial uses like other metals contaminates the pure monetary information conveyed by an asset. So if you see the price of silver going up, you have to ask yourself, is it because more people want electronics or various things that have industrial demand for silver, or because there's more demand for it as a store of value, as a monetary asset? And it's basically impossible to disentangle the two, which makes silver much less useful money in terms of its monetary information. By contrast, Bitcoin is a purely monetary good, which makes it a much better money than either gold or silver, which both have industrial uses. And I think this is something that Satoshi was onto as well. This famous comment, as a thought, this is Satoshi in one of the forums. As a thought experiment, imagine there was a base metal as scarce as gold, but with the following properties: boring gray in color, in other words, not interesting for jewelry or art; not a good conductor of electricity, in other words, not really having industrial uses, especially in electronics; not particularly strong, but not ductile or easily malleable either; not useful for any practical or ornamental purpose. In other words, just a pure monetary good, and having that one special magical property can be transported over a communications channel. If it somehow acquired any value at all for whatever reason, then anyone wanting to transfer wealth over a long distance could buy some, transmit it, and have the recipient sell it. So this is Satoshi clearly recognizing what money is and how something like Bitcoin, with its pure monetary value, differs from sort of mixed assets that have industrial uses as well as monetary uses like gold, for example. Gold demonetized silver, and Bitcoin is in the process of demonetizing gold. This is a function, as we said, not just of government policy and choices, but also of the fundamentals of the asset. Just like gold beat out Native Americans' wampum, which was the show money, owning gold today is like owning wampum in 1600. In a digital world, needs digital money, and Bitcoin has already won this global race for the best digital money. Bitcoin can't be censored. It cannot be debased. And we have credible assurances based on its construction that both of these things are true, especially when used in a self-sovereign manner. If you keep your Bitcoin on Cash App or Coinbase, they can censor where you send it. But if you use it in a truly peer-to-peer manner and you hold it in a self-sovereign manner where you hold the keys, you can send it to anyone. It retains these properties. Only Bitcoin is neutral, ethical digital money for 8 billion people. It's not some shady venture capitalist coin with an insider pre-mine like Ethereum or Cardano or Solana. So when it comes to investments, and especially when it comes to where you want to store your hard-earned money, your savings, choose that vehicle carefully, because we're currently going through a global monetary reset. The US dollar is slowly losing its status as global reserve currency and global reserve asset, and it's being replaced by Bitcoin. This choice of asset, this choice of money, is going to have an impact on you and your family for the rest of your life. So make sure you try to understand these issues and choose your savings vehicle and your medium of exchange and your store value very carefully. If you enjoyed this video, be sure to hit that subscribe and like buttons. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.